Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Russia, and specifically to talk about the ongoing impact of the sanctions that have been applied against it by the West. Now, as it stands at the moment, the European Union, the US, the UK, Canada, and a variety of other countries have applied more than 14 different rounds of sanctions against Russia. Thousands of individuals and companies have been identified as part of those sanctions, and that means that those businesses and individuals can no longer do the same level of business that they were doing historically. So this is really having a major impact on both those companies and also the Russian economy. And in today's video, I want to have a look at what's going on with inflation to start with, because unlike the rest of the world, where inflation is now starting to come down as a result of increasing interest rates and a concerted effort to try to bring it under control. And we've actually seen the European Union reducing their interest rates recently because inflation is now down to a level where they're comfortable to do that. We're not quite there in terms of the USA and the UK just yet, but we are very close. Potentially at some point in 2024, we'll start seeing rates coming back down again. But in Russia, it's a very different story. Inflation is the third highest out of every country in the G20. In fact, the only two countries that have higher inflation right now are Turkey and Argentina, both of which are in a state of economic crisis. So that tells us that there are major problems in Russia. And the fact that interest rates are currently at 16%, which is off the scale compared to where they've been in the West, also tells us that Russia is struggling to get inflation under control. So in today's video, we'll go through the details of what's happening with inflation. We'll look at where we are with regards to the movement of interest rates and food inflation. We'll have a look at what's been happening with factory gate prices, because they give us a very good indication as to what's likely to happen over the next few months with Russian inflation. We'll also talk about what's going on with regards to unemployment levels in Russia, because Russia is currently struggling with a lack of workforce. They don't have enough people to fill all of the jobs, so we'll go through those details. And then finally today, I'll wrap up with my summary. So what I think is likely to happen over the course of the next 3 to 6 months in Russia, and how Russia is going to cope with these sanctions. But before we get started on all of this, I'd like to say once again, thank you so much to everyone that's supporting the channel. If you're a long-term supporter, if you've signed up either through Patreon, where you can get early access and watch my videos advert-free, or YouTube membership, or Buy Me a Coffee membership, thank you so much for that. I really, really appreciate it. When I first started this channel, I wouldn't have believed that anybody would sign up to support me on a regular basis, but that's what a lot of you are doing. Hundreds of people have signed up. I really still can't believe it. So if you're one of those people, thank you. It genuinely means a lot to me. And if you've bought me a coffee or sent me a YouTube super thanks recently, I really appreciate that as well. Thank you for the time and the effort and the generosity. It means a lot to me. It tells me I'm doing something right, that people are liking these videos, and it encourages me to make more, keeps me motivated, and keeps me focused on trying to post as many as I can. So thanks a lot to everybody that's supporting me and the channel. This chart shows the movement in the official rate of inflation in Russia over the past 12 months. And what this shows is that in May 2023, Russia had a remarkably low rate of inflation at 2.5%. And when you consider that Russia is currently facing a whole raft of international sanctions, which are making the cost of its imports immeasurably more expensive, 2.5% inflation is an amazing achievement. And there were question marks over whether or not that was actually a credible figure. However, if you look at what happened between May and November 2023, there was a rapid and consistent increase in the rate of inflation, which hit 7.5% in November, which was the highest level that had been seen in Russia since February 23. Now, in the 6 months between November 23 and April 24, inflation stabilised and sat at around 7.5 to 8%. However, in May 23, we have seen inflation starting to take off again, and the official figure was 8.3%. And if we widen the scale of this graph to show what's been happening over the past 5 years, you can see that there's been a really unusual trend since the start of... You can you can see that there's been a really unusual trend since Russia's invasion of Ukraine started. In the 2-year period between February 2020 and February 2022, inflation rose from a low point of 2.3% to 9.2%. However, immediately following Russia's invasion of Ukraine, which commenced on the 24th of February 2022, inflation skyrocketed to 16.7% and then hit a high of 17.8% in April. Now, this large jump in inflation can be explained by the fact that Russia was hit with all of those sanctions, which made the cost of all of the imports much more expensive. However, what's more difficult to explain is what happened in the 12-month period between April 22 and April 23. In the 10 months between April 22 and February 23, there was a rapid and consistent decline in inflation, which got down to 11% by February. However, in March 23, inflation dropped down to 3.5% and then hit that low point of 2.3% in the following month. And this huge drop in inflation is really difficult to explain because at that point, Russia was under severe pressure in terms of the economic sanctions, and so the cost of imports remained high, and therefore you would have expected inflation to be increasing. So in order to get a better understanding as to what was going on in the Russian economy, let's have a look at what was happening with interest rates. This chart shows the movement in the official rate of interest in Russia over the past 5 years. And before we dive into the details as to what's happening right now and where interest rates are today, let's have a look at what happened immediately following Russia's invasion of Ukraine. In February 22, before the invasion started, interest rates were sitting at 9.5%, which is a high level. However, immediately following the invasion, the Russian central bank took the decision to introduce what it called emergency levels and increased interest rates to 20%. Now, as we've just seen, the immediate impact of doing that on inflation was that inflation levels started to come back down. And rather than waiting for inflation to get back down to its target level of 4%, the Russian central bank decided to start reducing interest rates. And in the 6 months between April and October 2022, the Russian central bank reduced rates on 6 separate occasions and brought the rate back down to 7.5%, which was actually lower than the rate before the war started. Now, interestingly, from May 23 onwards, inflation started to rise again. Again, there is no specific reason as to why inflation started rising again after the rapid fall that had been seen in Russia. And in the 6 months between July 23 and January 24, the Russian central bank increased interest rates on 5 separate occasions to the current level of 16%. And just to put that interest rate into perspective, this chart shows the current levels of interest in the G20, the 20 largest economies in the world. And you can see that the only 2 countries that have a higher interest rate than Russia are Turkey, where it's currently 50%, and Argentina, where it's 40%. And both Turkey and Argentina are currently in a state of economic crisis. And the only other 2 countries in the G20 that have interest rates in double digits are Mexico, where it's 11%, and Brazil, where it's 10.5%. And this chart shows the highest levels of interest out of every country in the world. And Russia is currently ranked at number 18 on this list, so there are only 17 countries that have higher rates of interest, and they include economies such as Venezuela, Turkey, Argentina, Ghana, Egypt, Nigeria, Malawi, and Congo. So none of these countries are performing particularly well at the moment. In fact, they can be classified as being in a state of economic crisis. So this really puts Russia into perspective. When you look at the figures, when you look at where its interest rates are right now, it tells you that there are major problems in the Russian economy. You don't have interest rates at 16% unless there are serious problems. This chart shows the year-on-year movement in food prices in Russia over the last 12 months. And if you follow the channel, you'll know that I always like to look at food inflation when we're talking about high levels of inflation, because it gives us a good flavour as to whether or not there are serious problems for the people in that country. And what this chart shows is that this time 12 months ago, in May 2023, food prices in Russia were actually falling by almost 1%. That situation reversed in June 23, and in the following 6 months, there was a rapid increase in food prices. and the year-on-year movement hit 8.2% in December. It remained at or around that level until April 24. However, the figures for May show that food prices year-on-year are now increasing by 9.1%. Now, the poorest members of any society can spend between 70 and 90% of their income on food. So when you've got a year-on-year movement above 9%, that obviously represents a problem. So in order to establish how big a problem this is, we need to have a look at what's been happening with wages. This chart shows the movement in real wage growth in Russia over the past 12 months. And when we're talking about real wages, that's the amount you're being paid adjusted for the movements in inflation. So it tells you after the general price increases in the country whether or not you've got the same amount as this time last year or more. And what this chart shows is that real wages have been increasing rapidly in Russia over the past 12 months. This time last year, real wage growth had increased by 10.4%. So that meant that people were being paid on average more than 10% more than they were the previous year, even after taking account of the inflation that was running at that point. However, the latest figures show that real wages have increased year on year by 12.9%. So that's after taking account of the current rate of inflation of 8.3%. And if we add that figure back onto the real wage growth of 12.9%, year-on-year wages have increased by more than 20%. And if you've been following the channel, you'll know that there is a major problem in Russia right now in terms of shortages in the workforce. Partly as a result of the war, there's been a mass exodus of people. Around 1.2 million people are estimated to have fled Russia to avoid being called up and sent to Ukraine. In addition to that, there's also the loss of personnel as a result of the war itself. And then finally, we've got a wage war going on because there is competition for employees. Therefore, companies are having to increase the amount that they're offering for new jobs, and that's driving up wages all across the board. And whilst that represents good news for the employees, and there's no issue with regards to what's happening with food inflation, it is a real problem for Russia because the more that wages go up, the more it's going to drive up inflation further, and you get into one of these price spirals where things keep rising in price, therefore wages have to go up, therefore people have more money, they can spend more, it drives up demand, therefore it drives up prices, and so it goes on. So let's have a look at what's happening with unemployment. This chart shows the official unemployment rate in Russia over the past 5 years. And if we start off by looking at the rate in 2019, which was before the COVID-19 pandemic affected the country, this shows that the official unemployment rate in May 2019 was 4.5%. And it stayed at or around that level until February 2020, when the COVID-19 pandemic started to really impact on the workforce. It got up to a high of 6.4% in August 2020. However, since that time, there's been a steady and rapid decline in the rate of unemployment. And by February 2022, the rate was down to 4.1%, which was broadly in line with where it had been sitting before the COVID pandemic. However, as you can see, following Russia's invasion of Ukraine in February 22, there's been a rapid decline in the rate of unemployment. And the most recent figures that have been published show that the unemployment rate is now sitting at 2.6%. And in order to give us a comparison, this chart shows the unemployment rate in the USA over the same period. And this shows that in June 2019, the rate of unemployment in the USA was 3.6%, so around 1% lower than it was in Russia at that time. We then saw a huge spike in the unemployment rate during the COVID pandemic, and it got up to 14.9% in April 2020. However, it soon came back down again, and by the start of 2022, the unemployment rate in the USA was 4%. It dropped to a low point of 3.4% in January 2023, and over the past 6 months or so, there has been a gradual increase, and the current rate of unemployment in the USA is 4%. And that's seen as being a relatively normal level. So the current rate in Russia of 2.6% is actually too low. There is a point in an economy where you don't want the unemployment rate to go below, because what it tells you is that you don't have enough people to be able to fill all of the jobs. And that's basically the situation in Russia right now. it's got a workforce that is too small to fill all of the available spaces. And what that means is that it will hold back your productivity. If you can't fill all of those jobs, it means that those companies can't grow rapidly. There's not enough people to actually do all of the things that they need to do. And therefore, that is going to have a really negative impact on the Russian economy. And this is one of the factors that is now starting to hurt Russia. This chart shows the year-on-year movement in producer prices in Russia. Now, if you follow the channel, you'll know that producer prices is something that we talk about a lot when we're talking about China, because China is a huge manufacturer, and so producer prices, also known as the factory gate prices, are really important because they tell us what's happening to prices further down the line. Because if the prices at the factory gates are rising, that generally indicates that you'll have more inflation because the prices on the shelves are likely to increase 2 or 3 months later. If prices are falling, then it means that you could potentially experience deflation, and that's one of the problems that China has suffered from over the past 12 months. Now, if we look at the situation for Russia, this time 12 months ago, factory gate prices were actually falling. They were down by 3.6% in May 23. That situation reversed in June when prices were entirely flat. And in the 3-month period through to October 23, there was a rapid acceleration in factory gate prices, and they increased year on year by 21.6% in October. That figure increased to 21.9% in November, and remained above 19% in the 4 months through to March 24. In April, the year-on-year movement was an increase of 18.4%, and the most recent figures for May 24 show that year-on-year factory gate prices have increased by 16.2%, which is almost double the current official level of inflation in Russia. And what this tells us is that price pressures are going to continue in Russia, because if factory gate prices are rising by 16%, it means that the on-the-shelf prices are likely to be going up at or around that same rate. The only reason that they wouldn't be going up by 16% is if the companies in Russia decide that they have to start cutting their prices in terms of competition. And that's not really very likely right now because Russia still has a huge amount of sanctions against it. So Russian companies that are producing things to be sold in Russia are not facing a high level of competition. Or if they are, the competition is going to be priced at a higher level because you're having to pay for all of those goods to be imported. So what this chart shows us is that the price pressures in Russia are likely to continue for at least the next 3 to 6 months, if not longer. And that's going to put further pressure on inflation, potentially means that Russia may need to increase its interest rates even further, and that's going to cause the economy even more problems. And when you look at the shape of this chart, it doesn't look like there's going to be a rapid deceleration in factory gate prices anytime soon. There is a slight downward trend here, but it's likely that factory gate price increases will remain in double digits for the rest of 2024. And that's bad news for inflation and the Russian economy. Now, whenever we look at the Russian economy, I always like to check out what's happening with the Russian ruble. And this chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the past 5 years. And what this shows is that 5 years ago, 1 US dollar was trading for around 63 Russian rubles. Over the following 2.5 years, the value of the ruble deteriorated and was trading for around 70 to 1 US dollar by October 2021. By the middle of February 2022, just prior to Russia's invasion of Ukraine, the value had fallen further to around 78 rubles to $1. And you can see that immediately following the invasion, the value of the ruble collapsed and was trading for around 125 to 1 US dollar. However, the Russian central bank then stepped in and started buying rubles in the international market, and the value of the ruble increased to 50 to 1 US dollar, which was actually the strongest level that it had been trading at any point in the past 5 years. However, the cost of supporting the ruble in the international markets proved to be very expensive for the Russian central bank, and by the summer of 2023, the value of the ruble had fallen back down to 100 to 1 US dollar. Now, that proved to be too much for President Putin. He told the Russian central bank to do something about it, and a variety of different initiatives were introduced, including restricting the amount of foreign currency that companies in Russia could hold and various other restrictions. And as a result of that, the value of the ruble then came back to around 90 to $1. And that's broadly where it's been trading since November 2023. And if we zoom in and have a look at what's been happening over the last 12 months, you can see that there have been fluctuations in the value of the ruble. But the Russian central bank is now focused on keeping the rate at around 90 to $1. And the way that they're doing that is by buying rubles in the international market. And also today, the market for rubles is a lot smaller than it was at the time of Russia's invasion of Ukraine, because none of the countries in the West are using rubles anymore. Most countries are not trading with Russia, and so there is no reason to be buying rubles. And the big trading partners that Russia has today, China and India, are both refusing to deal in rubles. China will only deal in Chinese yuan, so therefore when all of that trade happens, it doesn't have any impact at all on the value of the ruble. And India initially wanted to deal in rupees, but Russia said no. Russia wanted to deal in rubles, but India said no. And so they are now doing trade in a combination of Chinese yuan and United Arab Emirates dirhams. So again, that trade is not having any benefit in terms of the value of the ruble. So essentially what we're looking at here is an exchange rate for a currency that is dying. Nobody in the world wants to use rubles apart from Russia. So what's the summary and conclusion today? Well, I wanted to post this video because I think it's easy to get sidetracked when we're talking about what's going on with the Russian economy. You see headlines all the time about how Russia is doing really well. It's selling more oil than ever before. President Putin is glad that the war's happened, that he doesn't want to deal with the West anymore. It's good news for the Russian economy. All of this rhetoric that you see in the press, it's easy to start thinking that Russia is actually unaffected by what's happened, that the sanctions have had no impact whatsoever and Russia is doing really well. But the proof of the pudding is always in the data. And that's not actually a phrase, but maybe I'll start up. Maybe I'll get a t-shirt printed with the proof of the pudding is in the data. But anyway, the data tells us what's actually happening. Now, the data coming out of Russia is entirely limited. We don't get the full suite that we used to get. We don't get as much information as we get for other economies. So we have to rely on what we can see. And one of the main pieces of data that comes out on a monthly basis is inflation. And inflation does give us a good flavour as to what's happening in economies. And we talk about this a lot. If you follow the channel, you'll know that I've been talking about Argentina, which currently has the highest level of inflation in the world, almost 300%, which is completely mind-bending. If you're living in an economy like that, it is very difficult to keep pace with the movement in prices. Now, we don't have that situation in Russia at the moment, but what we do have is rising inflation. And we saw the figures for May. It's actually gone up above 8%. Now, that doesn't sound too worrying in terms of it's not at 300%. But when you look at what's happening in the rest of the world, so in the USA, the UK, Canada, the Eurozone, prices are starting to slow down. So inflation is falling, prices aren't actually going down, but the rate of increase of prices is slowing. And the reason for that is twofold. Firstly, interest rates have been raised in most of those areas. And what that does is it tends to reduce spending because borrowing becomes more expensive. So people and companies don't want to take on new debt because it's expensive to do so. And also some existing debt becomes more expensive. So that also means that people and companies have less disposable income because they're spending more on their interest payments. And also high interest rates encourage people to leave money in the bank because you're earning some credit interest. You can watch the value of your capital pot grow. So the increase in interest rates that we've seen over the last 18 months or so is now bearing fruit and inflation is starting to reduce. But that isn't happening in Russia, despite the fact that Russia has increased its interest rates to 16%, which is far, far higher than we've seen in any of the countries from the West. So you would have expected that high level of interest rate to actually reduce spending very rapidly and bring inflation back under control. But what we've got in Russia right now are high interest rates and high inflation. And what that tells us is that there is a disconnect between what's going on in the economy and interest rates. And one of the reasons for that is because imports are becoming much more expensive as a result of the fact, firstly, of the sanctions. So Russia is limited in terms of where it can source its imports from. So it's having to get whatever it can. And some of those imports are at high prices. So that's pushing up prices within Russia. And also, the value of the ruble has fallen over the course of the last couple of years. As we saw from the graphs earlier, prior to the war, the ruble was trading at around 75 to $1. Now it's trading at around 90. So that pushes up prices as well. And all of this tells us that there is problems in the Russian economy. When you start to get a disconnect between interest rates and inflation, it makes it very difficult to bring inflation back under control, because one of the key levers that you have in trying to reduce inflation is interest rates. But if interest rates become ineffective, if they're not working anymore, then you're really at the mercy as to what's happening in the global economy. And the global economy right now is against Russia because of the sanctions and the limited markets that it can deal with. It doesn't really have a lot of choice. So if the market is pushing up prices in Russia, there isn't a great deal that the Russian central bank can do about that. And the other thing that we talked about in today's video is what's going on with regards to manpower, unemployment and wages. And what's happening right now in Russia is that there is a shortage of people, partly as a result of the fact that a lot of people left at the time when the war started and the subsequent mobilization, which frightened off around 1.2 million Russians. They decided they didn't want to hang around and run the risk of being sent to Ukraine. And in addition to that, Russia is no longer a very attractive place to move to. There isn't a huge wall of people trying to get into Russia to take on all of those jobs. So the combination of those two factors mean that there aren't enough people to actually fill all of the vacancies. And as a result of that, companies are now having to offer higher salaries to people to encourage them to move jobs. And that is driving up inflation. And we saw from the data that the current level of unemployment is now at a low point, and it's significantly lower than it is in the USA. And whilst you might be thinking, well, doesn't low unemployment mean that it's doing really well? There comes a point where you actually don't want unemployment to continue falling, because it means that you simply don't have enough people to be able to drive the productivity. And that's really the point here. If you don't have enough workers, then your companies can't grow, they can't expand, they can't make more profit, and therefore they won't pay as much tax. And so the economy starts to slow down. And that's exactly what's happening in Russia right at the moment. So the overall summary of today's video is that the ongoing impact of the sanctions that are being applied against Russia is really starting to squeeze the Russian economy. We're now starting to see that manifest itself in high rates of inflation and increasing inflation, high interest rates, and low levels of unemployment. And this is going to be a really difficult puzzle for Russia to solve, because they really need more people in order to fix this problem. And right at the moment, that's one of the things that they are not in control of. Their birth rate has been falling, the death rate is up. They've got a lot of people who are being deployed in Ukraine. They've had a lot of people flee the country because they didn't want to hang around. And that means that Russia really isn't in a position to fix this problem. So over the course of the next 3 to 6 months, it's likely we'll see the situation get worse. We may well see inflation going into double-digit territory. Interest rates could be raised again. It could go back to 20%. And all of that will be bad news for the Russian economy. So hopefully you've enjoyed today's video, found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.